In this video, traders, we're going to look at 5 ways the market tries to suck you in to trading choppy environments. Stay tuned. Hey traders, warm welcome to you. All right, so as we approach summer, and also depends whenever you're watching this, we could be at holiday season, quiet markets, they happen all the time. Markets go through phases of volatility, they go through phases of quiet and calm. But at the moment I'm filming this, it's coming up to summer, and so they tend to have little bursts of volatility and it goes quiet. Bursts of volatility and quiet. And there's 5 things, guys, you've got to watch out for. That means you're getting settled, that they're there to try to suck you into chop, should I say. So in other words, things that kind of excite you, go, yeah, I want to get trading, and you look at other stuff and go, nah, you know what? Let's head to the screen and let's check them out. All right, guys, so the first one, in fact, the one I'm going to bring up for you is I'm going to bring up for you the SPY, because the SPY is proxy for what I like to trade, which is Dow via a spread bet. Okay, so 5 things. The first thing is when we get gaps up that really just do not do anything. Most of the time a gap up, you're like, yay, a gap up, finally we've got some action, because a gap up means we're either going to rip, we're either going to dip, we're going to fill the gap, I've got loads of things to work off, rub your hands, let's go. But at the moment we're getting gap ups or gap down that just kind of just peter around, they half gap fill, they come back, maybe they gap fill later in the day. There's no real urgency, everyone's just chilling out, no one's doing anything. So number 1, guys, is to watch out for the gap. If the gap is happening inside a range, be very, very careful. If the gap is happening and potential quiet period of time, like summer, like Christmas, like any other holidays, particularly school holidays coming up, then be very, very careful. All right, number 2, guys, is when you get a burst of volume on a 1-minute chart or a burst of action on a 1-minute chart that then just filters out. All right, let's just stick a volume on. I pulled it off a second ago because I was just showing some little bits. So let's have a look at SPY here. So here's one. You've got a big spike in volume. Off we go. Oh, it's a good bar. It's taken to highs. And of course, it just rolls over because we're in an environment where no one's that keen, no interested. Price position is pretty irrelevant. Volume is irrelevant at the moment. It looks good, but it's not to be trusted. You've got to really pick your points and pick your spots. So watch out for volume spikes and price spikes. They're just sitting there within a no man's land really, and try to get you involved and keen and excited and trying to trade breakouts. That brings me quite nicely, guys, to number 3, which is false breakouts. So false breakouts happen so regularly in quiet periods of time that they're almost a good fading strategy on its own. However, you still got to be careful with doing that, because sometimes they break out and it will then chug. The other day I was watching a Dow. In fact, let's go to the screen and have a look at it. The other day I was watching this market, and we can use SPY as well, so same time kind of thing. And the market was just at a really good move. In fact, we're on a 1 minute here, let's get to a 5 minute. And a really kind of good move from low to high that hadn't done for a while, which was this one here. So it had gone from the open around here, dive lower, and now we had this really kind of chunky rally. Doesn't look like much, but it's the biggest rally we've had for a long, long time. And it started to push. So if you're trying to be clever and fade breakouts there, you were going to get stuffed on that because the rally was grinding high. Now we're not talking volatile market. We're just talking a big stretch, a little bit stretch more than normal. And so you've got to watch out, guys, for these false breakouts during the choppy times. They suck you in. It make you want to get involved in it. It looks kind of tempting, but really, even if it's a breakout, often it'll just fizzle out, and you can't even get on the end of it with a fake out because it's difficult to time, because it might sit at highs for a bit and roll over. Quite hard to read. All right, guys, number 4 is a flurry of excitement at the open, only to do absolutely nothing. So you get an open that just drives in one direction aggressively. You're like, great, something's going to happen, and then it just dies off. It's just literally opening order by a couple of big funds or whatever, bang, moves the market, and then just sits there and does nothing. And sometimes it might just come all the way back, sometimes it will carry on, but you can't get a good read on it because it's literally had that impact and then stopped. it's challenging to find when the next leg is, and you're waiting for the next signal. There's going to be some more momentum, never comes, and you kind of sit there and go, well, the pattern looks all right, this, that, but I just haven't got a signal to get in. It's not quite clean enough, and you end up having to leave it. And what you've got to be careful of is that you're not second guessing it and going, well, I'll take it anyway. I'll take it anyway because it's likely to do that. And you kind of try to print what you've seen, or your subconscious is referring to previous setups, and you go, well, it looks the same, but no, it doesn't, because you haven't got that follow through, you haven't got that continuation, you haven't got all that other stuff. Okay, guys, and number 5, the final one you've got to watch out for in these environments is news. So news is a big thing that comes out. It's such a big deal's made of it. It's ridiculous, really. You've got news coming out, and people will be talking about news coming out in 2 weeks. And because it's quiet, that's all they've got to talk about. And that's a little bit of a clue as well. When you've got the financial media picking up on the odd stock here and there, they're talking about news that's happening in 2 weeks' time, 3 weeks' time, 4 weeks' time, and they're saying the market's waiting for that. And you think, it's not waiting for that, it's just not doing anything. So that is really what you've got to watch out for. And you've got to say, okay, well, the market's waiting for that. Maybe something's going to happen with that. Maybe it's not. And in my experience, guys, most of the time it's still going to be a nothing, unless of course it's unusual news of surprising the market, of course. But most of the time, it's just going to be exactly the same scenario as it was before the news. If it was quiet before the news, it's probably going to be quiet after the news. So your best bet is to kind of still cherry pick your setups and forget about the news. Now, of course, be careful about trading over news. Not saying just completely disregard it, but just don't hope that there's going to be massive amounts of volatility coming in the news, because the trap you'll fall into, is all about traps, is that you'll sit on your hands for a bit, you'll be waiting for the news to come out thinking, well, it's going to be spicy after news. News will come out and it'll be exactly the same as it was, and potentially you might get frustrated and start to look for trades that aren't there. You're better off looking very carefully and being very cautious about the trades you select all the way through that period up to the news and past the news, rather than waiting and hoping that volatility will come in after the news. Or you just don't trade the period at all. I know guys who take whole of summers off, or take whole of times that the markets are quite off, put in some alerts for big ranges on markets they want to trade, and don't touch it. And that's not a bad way of doing it, because then you're not involved in it, you're not getting potentially frustrated by things going back and forth doing nothing. You don't get setups, and you just get alerted if something kicks off. Otherwise, you're back to the screen in 4, 6, 8 weeks time, ready for potentially when everyone else comes back and money flow starts coming in. All right, guys, see you next one. Take care. Bye bye.